Yang berbahagia Datuk Sri Cheah Cheng Hye, Chairman and Co-Chief Investment Officer of Value Partners Group Limited. Yang berbahagia Datuk Phua Kiau, Chairman of Star Media Group. Yang berbahagia Datuk Sri Wong Chun Wai, Group Managing Director and Chief Executive Officer of Star Media Group. Mr. Lee Siang Chin, Director of Star Media Group as well as Value Partners Group Limited. Distinguished guests, ladies and gentlemen, good morning and welcome to the second edition of Star Media Group's Power Talks. I'm Anis from Star Media Group, and it is really wonderful and awesome to see such a full house today, Datuk Sri. Well done. Please give yourselves a big round of applause. It's nice to see familiar faces, new faces, and guests of Datuk Sri here today. Thank you very much. Ladies and gentlemen, our role as a multi-channel media company is to keep Malaysians informed and inspired through our content and services. We strive to offer our audiences the best-in-class products and experiences, as you can see through the marble video just now. Through print, digital, over-the-top, which is dim sum, TV, events and exhibitions, training and out-of-home, Power Talks is presented by StarBiz and the Star TV, and it was created for readers of the Star to get up close and personal with high-profile business leaders and captains of industries, and our way of connecting with our readers and our audience beyond printed words. Today, we are really honored to have Datuk Sri Cheah Cheng Hye, Chairman and Co-Investment Officer of Value Partners Group Limited. And I'm sure after this talk, you'll all be empowered by his compelling views and insights. At the end of this session, there will be a Q&A opportunity with our guest speaker. To tell us more about Datuk Sri Cheah's illustrious journey to success, let's invite our moderator, Mr. M. Shamugam from StarBiz, for the citation.
A very good morning, ladies and gentlemen. Welcome to another session of the Star Power Talk Business Series. The response today is great, so we had to shift the venue to another place. Normally, you have it in Menara Star. Okay. The hallmark of a good fund manager is to spot the investing trend way before others, to be able to spot where the smart money is going, and to spot a gem of a stock before others jump on the bandwagon. I dare say Dr. Sri Cheah has all these hallmarks. I first met him in Penang in 2009. It was during an investor conference. And at that time, he was asking me about the property market in Penang, which I thought was a little bit overvalued. And I thought the opportunities were better in KL. But how wrong I was, because in the next 4 years, the property market all over the country had a fantastic bull run. A Penang Free School boy, he started not even as a financial journalist. I was told that he was employed as a composer in the Star office in Penang in 1971. The editor then, K.S. Chung, saw him reading the newspapers quite often and offered him a job as a cub reporter. Salary was 120 ringgit. My friend Rajan Moses here tells me that he used to share a typewriter with Cheah. And he likes to be known as Cheah. Okay. 1974, he went to Hong Kong to join the Hong Kong Standard. And then he went on to join Asia Week, Far Eastern and Asian Wall Street Journal. However, he found himself drawn to the world of investment. He learned accounting and the art of investment himself by reading books. He eventually left journalism to join the world of equities market. He joined the research unit of Morgan Grenfell. There he carved a niche for himself in researching small and medium cap stocks, when equities research then was largely focused on the large caps. So it was only a matter of time before he went on to set up his own asset management companies. In 1993, Value Partners was established, and today it manages an asset size of US 14 billion, no mean feat. Cheah himself has won numerous awards in his 30 years in the field of investment. With this, ladies and gentlemen, please join me in welcoming the Warren Buffett of the East.
Good morning, ladies and gentlemen. Uh, Many thanks to the Star for making this event possible, and deeply appreciate the work of the Star team to put this together, and appreciate the presence of Dr. Fu, Dr. Siri Wong Chung Wai, Director Lee Siang Chin, and really, my heart goes out to Shamugan and Ennis for really leading the team that put this together. Give them a round of applause. And most of all, to each and every one of you in this hall for taking time from your schedule to come this Saturday morning. So my job this morning is not so much to talk about achievements or success, but to share with you what I had learned of what works, what doesn't work in building a professional career. I think that will be a more interesting topic. But of course, I will start by giving you an introduction to myself and my background. So as Shamugan has indicated, I was actually born in Penang. I attended the Penang Free School. And in fact, I left Malaysia a long time ago in 1974. But because my family resides in Penang, I continue to come back numerous times every year. I was a journalist for all of 17 years, and I only changed my career when I was already 36 years old, when I left journalism to join the financial services industry. It was quite a late start. Yes, as Shamugan mentioned, I started my own little business by leaving my employer in 1993 with my partner from an old family in Hong Kong, the Ye family. They are the Sin Chong Group shareholder, or controlling shareholder. We started with less than $5 million US under management. The money was raised on what we call friends and relatives. Today, we manage approximately 14 billion. Actually, now it's way more than 14 billion US dollars. That's 62 billion ringgit. So the funds we manage for people grew 2,800 times in the last 24 years. My partner was always been passive. He was never working full-time with the company. So I have been in charge of the firm, both the business and the asset management, since inception. In other words, I was both the cook in the kitchen and the front office restaurant manager. I became known in Hong Kong initially as a specialist in mid and small cap stocks. The reason is that the large, well-known brands specialize in what they call index stocks, large, well-known blue chips. So to survive, I focused on the stocks that they didn't look at, the mid to small cap stocks, which at that time was looked down upon and despised by institutional investors. Share with you a few pages from my photo album. So you will see there a picture of me when I was in Form 1. And then this is picture I chose it because it was right outside the Star's office in Penang. I have some old colleagues like Roger Moses now in the audience, I know, so they may recognize it. Many people thought that the Star started in Pitt Street, Penang. That's actually not true. It started in 1971 in a building that still exists in Penang, in an area called Well Key, known because there are still all these water houses that people who didn't own land built wooden houses right on the water. And the Star office faced that. And by the way, that motorcycle also has a little history. It was called the S90 Honda. I bought it second hand, and later it was used to pay for the ticket that allowed me to go to Hong Kong because I had no savings at all. So I've always had a very special relationship with the Star. In the year, for example, 2015, the Star published an article about me that was quite well known. And as Shamugan may have pointed out, I in fact didn't even start as a reporter. To be quite precise, I started as a newspaper folder. Because the Star in those days used a Heidelberg press, old and secondhand from Germany. They require human beings to fold the newspaper. So we started at 10 at night and finished at 6 a.m. the next morning. By 6 a.m., your face was completely black with newsprint. That was my first job in the in Star Publications, yeah. The picture shows me in Penang Road at that time. Now, fast forward to my days as a fund manager. So Next Magazine at that time was Hong Kong's most popular paper. And I mention this only because this is me and my partner, Mr. Ye. By then, we had achieved our first 1 million clients in Hong Kong out of a population of 7.5 million people. Most of the clients are small clients who came to us through MPF, like the CPF or EPF, but they still are our clients. So we're very well known in Hong Kong, not so well known outside Hong Kong. You see them, me, someone born in Malaysia and from Hong Kong, the first and so far only Asian to be invited to deliver a lecture at the Columbia Business School, the famous Graham and Dodd breakfast for value investors. Even Warren Buffett lectured there one time, yeah. So I was the lecturer for the year 2010. And you see my IPO there on the Hong Kong Stock Exchange in the year 2007, November. We IPO our company as the first and only asset management company to be listed on the main board of Hong Kong. And here is a book that became a bestseller in Hong Kong recently, published in December last year. The book is written by a famous writer called Tony Choi. It's an independent book, nothing to do with me personally, in terms of commercial situation. And this book is now a bestseller in Hong Kong alongside the new book about Warren Buffett. The book about me is called Cheah Cheng Hye, His Values. I must admit, I actually don't know how to read Chinese, but that's translated. But alongside Warren Buffett's book called 10 Investing Lessons. The book will be published into English in the next few months. Yeah. Okay, value partners, just to complete the full introduction. It's got a market capitalization today of 14 billion Hong Kong. That's the asset management company, not the funds under management. So it's about 8 billion Malaysian ringgit market cap. And I'm the single largest shareholder. I own 25% of the company. It's one of the very few independent brand, large-size asset management companies in Asia. Our main claim to fame is that we have incredible performance. We have won more than 140 performance awards since we started. And we are usually regarded as the biggest success story in the Hong Kong's asset management industry. We have 200 plus employees, Hong Kong, Shanghai, London, and Singapore. And this is not as easy to achieve as one might think, because unlike protected markets that include, for example, Malaysia or the mainland of China, Hong Kong practices what they call an open market and a level playing field. So the small guy has to fight with the big guy from day one. From day one, a boutique like Value Partners has to compete directly with HSBC, Fidelity, Templeton, Aberdeen Asset Management. That's why there have been very few, almost no example of a Hong Kong brand that has succeeded. Because you're putting a 4-foot guy, 4-foot tall person in a room with a 6-foot tall giant and asking them to fight on the level playing field. It really was very difficult. Just let you know is that I'm also part of one of the group of people advising the government of Hong Kong on the development of financial industry. And recently I was nominated to sit on the board of the Hong Kong Stock Exchange. That is a very prestigious seat. I'm replacing a guy who was there for the last 12 years. As mentioned, our brand basically is based on performance. So we have won more than 140 performance awards. Most recently, just as examples, we were named the Fund House of the Year for Hong Kong by Asian Investor. We were named the Best China Equity Fund Provider by the magazine for private bankers called Asia Private Banker. We were named the Best Equity Group for Hong Kong by Lipper, Thomson Reuters, which is very prestigious. And interestingly enough, we are now also winning awards not only for stock market performance, but for fixed income as well, for bonds. So we are diversifying. Of all the factors that I think are critical to our success story, I would say that corporate culture is the single biggest factor. If you join my company, you are encouraged to sign this promise that is made to the company. It's then printed and put in the computer in front of you. The problem is very straightforward. It reflects my own personal beliefs in what is a good way to behave in terms of working as a professional person. The main promise are that we ask people, please be honest person, be straightforward person. Very easy to say, can be very hard to do. We ask them not to walk around with a big ego, but just to put their professional pride in their job. So you're very proud of what you do, but you have no ego. If you're wrong, you just say you're wrong. We ask them to commit to a lifetime of continuous self-improvement. Never stop improving yourself. You know, life is a process of continuously learning. And here I actually learned it from my first job in Mong Granfo. My old boss, Mr. Cheah, who was became subsequently the chief executive of the Stock Exchange of Singapore. He taught me always put your client first, interest first. In the short term, you may not benefit because your interest comes second, but in the long term, clients will know they can trust you, that you will always look after them before yourself. So because clients come to see me the same way they go and see a doctor, they have a problem. They see a doctor because they are sick. They come to see me because they have savings that they want to put to good investment use. So I am the solution provider. I am the doctor. To start with, they have to trust me. They already look after them. In Value Partners, we always say that we have a no-blame environment. We don't blame people for making mistakes. Mistakes are, in fact, very okay. We only blame people for having bad attitude. Your attitude is bad, even though you don't make mistakes. You may not keep your job for very long because we sense that you are not carrying out this kind of principles. But you have this kind of principles and this kind of attitude, mistakes are okay because mistakes are only human. So this promise is the core of the corporate DNA or corporate culture that allow us to differentiate ourselves from all those multinational big companies where, frankly, most people don't care. They just do their job and go home. You may be interested to know that in Value Partners, quite a number of my most senior people have worked in the company since they left university, and they have never left. And also, because of our very much a sharing environment where we share, it's like a cooperative, in good years, our employees are among the best and highest taxpayers in all of Hong Kong. So we now finish this part about the success story as such and talk about what really happened. What are the reasons for this story to happen? I think the first thing to say is that I'm just a very lucky guy. You may remember I said that I started working in 1971. For those of you old enough, you may remember what Malaysia, including states like Penang, was like back in the 60s and early 70s. We were really desperately poor. Unemployment was very, very high. I still remember the number of schoolmates who left, couldn't afford to go to university, and the women that go to England to be trainee or student nurses. The guys would be jobless. And the factories that only just came to buy and lepas. So, in fact, looking back, 1971 was the beginning of the economic miracle in Malaysia, when the country really started to take off with industrialization. But of course, when you're in 1971, you didn't know that. All you know is that you're very hungry all the time, and you're not even sure you can find a proper job, right? But in fact, I'm the generation that started at the beginning of the economic miracle that transformed Malaysia and the whole of Southeast Asia. And then my investment career, when I changed from journalism to finance, started in 1989. In the context of China investing, that was really the bottom. Because on June 4th, 1989, we had the unfortunate Tiananmen incident, following which many countries imposed a boycott on China. At that time, it sounded terrible, but in fact, that was actually the bottom. Again, I started at the bottom of the building. I can only go up. So my best guess is that at least 50% of my professional success is due simply to being in the right place at the right time. It was just luck. It's nothing to do with skill. So single most important factor. But then, when I started thinking about it, when I was trying to prepare this speech for you, I realized that there were lots of other people who were like me, right? In the right place at the right time. So what's so different about my story? So my success formula, putting aside luck, chance, and circumstance, only 3 distinguishing factors. I think it has to do with character, training, and values. This is the DNA, the software inside my brain and governing my character that allow me to explain why I was able to differentiate myself. The single most important factor in determining the success or failure of a professional fund manager like me is in fact the character of the person. So now when I interview people, I'm studying the character more than anything else. I'm actually not very interested in whether the guy went to the right university or what subject he or she may have studied, or even his previous job. I'm looking carefully at a certain type of character, which I will explain later in this speech, that I think would make all the difference. But before I do that, I want to take 2 steps back first and clarify a little bit. Because I think most of the people I have with me today, all of you, most of you, are not commercial fund managers. Maybe many of you are investing your own money or in different fields. But I am actually a commercial fund manager. What do I mean by that? By that, I mean I'm in what they call the OPM business. Not OPM business, OPM. I'm in the business of managing other people's money. OPM is other people's money. Now, you are in the OPM business. What is required from you to succeed is not just being good in investing, as some of you might think. Being good in investing only means you are a good cook. But I'm operating a big restaurant. If I'm operating a chain restaurant, being a good cook is only one factor. The truth is, you also have to be an excellent entrepreneur to spot the opportunities and put up a good business model in an incredibly competitive global industry. You also, of course, need to be an excellent investment manager, meaning you're good in investing, which is the main focus of this speech, but not the only focus. You have to be good in fundraising, marketing, and sales, because you can't be managing OPM. You don't know how to raise money to have OPM, right? So you have to be able to talk people into trusting you to subscribe to your funds. And at the end of it, you can't just let it go. You have to be able to go to the office every day and run the company successfully. Sustainable, ongoing business operation, right down to hiring the tea lady. So these are different skill sets that are required to do what I do, operate an asset management company that is listed, that is commercial, and that looks after other people's savings. That's why it's so difficult to run and sustain a large asset management company. Contradictory skills are required. Very often, the excellent fund manager is a very studious, introverted person who just wants to be left alone. Please don't bother me, and I don't want to meet people. But a successful entrepreneur is someone who loves going out to shake hands, play golf, and socialize. And a successful fundraiser is the kind of guy who can tell you a long story out of just maybe 2 facts, you know? So these are all contradictory people, but you have to combine the one person, or in my case now, one team, because I've grown enough to be able to afford to have a team of people, but it's still very hard to sustain it. Okay, let's go back to the character part of it. So when I realized that as an adult, I was leaving school at Form 5, or at that time we called it the MCEO level, and I couldn't even go on to the A-level examinations, I knew I had a problem. I got to get a key. What is the key I needed? I need a key to teach me to learn how to learn. It's not so much what I know, but how much I can know if I want to know. So I became an expert in learning how to learn. Tell me anything, any problem, any subject. Even in the days before internet, I will make it my business to be self-taught. I have a lifelong commitment to learning, to the point where those of you who know me will know that quite a long time ago, my own signature was changed by myself from Cheah Cheng Hye to learn. Now I sign my name, learn. So every time I sign something, I remind myself of my lifelong commitment to never stop learning. I have practiced various methods to be very good in trying to find what are the things I need to do and steps I need to take and measures I got to plan to learn new things all the time. And I'm a reading addict. Those who know me will know that I'm not very sociable, and I spend most of my time just reading books, endless reading. This goes all the way back to Penang as a teenager, when I was very frequently to be seen after school in the Penang Library or the British Council Library, or in those days we had something called a USIS in Beach Street, the US Information Service Library. Of course, I didn't realize at that time that a lot of it was propaganda. I just read everything. Anyway, and that's for Malaysians of my generation, when the country was really poor, sometimes a little bit desperate. We were self-starters. We were really adventurous. We saw life as an adventure. There was nothing for us in the way of safety net, security, etc. You won't believe the level of drug addiction in Malaysia in those days. Dada, you know? People young died from taking too much drugs. There was a lot of, I would say, something strange in the air about Malaysia, where young people were very brave, very daring, very adventurous. That applies to people like me too. And then after I left Malaysia for Hong Kong, I learned the Hong Kong thing. I became very time conscious. In Malaysia, I was like everybody else, very rubber time. But in Hong Kong, I learned to be very punctual. Now I'm very careful about the use of time, always thinking, I only have 24 hours a day, what do I do with that time? And also, one lesson taught to every recruit to value partners is that we live in a very brand-conscious world. When people buy a car, they will be thinking, what brand is this? Mercedes? Kia? Nissan. Every brand means something and at a certain price. Make sure your brand stands at least for Toyota, or preferably Mercedes or BMW. Build on your brand. If your brand is spoiled, it's game over. So many people don't realize your name is actually your personal brand. Be careful with it. My training as a journalist helped me a lot in putting events not in purely a financial context, but in a historical, social, and political context. So helpful to me now, especially for Asian investing, where politics can determine success or failure of an investment situation. Many investment professionals who are competing with me, they are trained only to see things from a financial analyst point of view. I found again and again that that's very one-dimensional. In many Asian countries, including China and Malaysia, political priorities often overcome economic arguments. So as a journalist, I think one of the first things a young reporter was taught is called the 5 Ws. Who, what, when, how, where. So when I look at an investment, I always say to myself, what are the 5 Ws? And often, part of the 5 Ws is not about PE ratio or financial analysis. It's about what are the political priorities of this situation. What are the preferences, the quotas, etc. This helped me a lot. Now, the other thing I learned is that from the time I was I was fairly quite young, I began to realize that if you focus too much on trying to make money, you ain't gonna make it. Because people are too scared of you. They think you're money crazy. So I focused a lot on professional excellence. I want to be the best heart doctor. My theory is that if I'm the best heart doctor, the customers will find me. I don't have to find them. In other words, if I'm very good in my profession, those people with money will find me and will be very eager to give their money to me. I don't have to go and find the customers myself. So my theory is money is a byproduct of professional excellence. And also, there's one good thing about studying in institutions like Penang Free School is that you get a lot of training in soft skills, especially leadership, communications, courage, imagination. That's in real short supply. The world is flooded, saturated with hard skills. Hard skills are skills you need to learn to pass an examination that can be taught or learned from a textbook. Because we have such a competitive society, young people acquire hard skills to the point where there's just too much of it. So since I don't have much formal education, my focus always has been on soft skills, EQ, situation awareness, leadership ability, communication. So I would say that this has really helped me a lot in my life in putting together a team of very dedicated people, each of whom is very strong in hard skills, but you need a soft skill guy to motivate them and keep them together. This is one of the part of the DNA of value partners. And finally, concurrent investor, that one I won't spend too much explaining, it's very specialized, but just to let you know that most of what you know or what you read in for example, the Financial Times, is actually useless information. Because what you know is also what everybody knows. It's actually in the price. We who are professional frontline investors know that very well. We still need to read the Financial Times because we've got to know what people know. But we had to go beyond that and try to find things, or rather insights, that the majority don't know. That's where we had the advantage, the edge, you call it. So the concurrent investor is one who do things that defy the conventional wisdom or the common knowledge, or put it another way, the knowledge of those who read the newspaper every day. We had to go one step beyond that. Another way to put it, to explain this concept to you for the young analysts who join, is that we need you to imagine what a newspaper like the Star, what the headlines will say. Not today, 6 months from today. Focus and think. Where if the Star newspaper reporter or the Star Biz come and cover the story, what would the headline be 6 months from today? Get the answer right, you will eventually be the world's wealthiest person. Now, a few other concepts that I have lived by my whole life so far is that I am very unforgiving to myself. I make very high demands on myself, but very forgiving to others. This is the opposite of how most human beings, I think, behave. They always make a lot of excuses for themselves if they don't do well. They try to forget their mistakes and try to exaggerate their accomplishments. I am the exact opposite. I remember my mistakes and I'm very unforgiving. But to friends and others, if they make mistakes, I try to comfort them and say, it's okay, don't worry about it. You know? That way, the truth is, I become more and more competitive as the years go by. Whether you talk about health or professional awareness or whatever, I've been working on it since I was a very young boy. My father died when I was 9 years old. And in the Penang context, that means we are gone, you know? We have really got nothing. So people like me have been working since 9. So we have to learn to survive a game of survival of the fittest without losing our sense of self-respect and dignity. It is not easy. So I also developed an idea which has become quite well known to my colleagues, called the smart stupid idea. I actually see myself as a damn stupid guy, very humble and stupid, because I know that if I do that, I will become smart. But if I see myself as a smart guy, I will become stupid. It's inevitable. If you think you're stupid, you will work harder to get the facts and improve your skills and do a better job. So we are all encouraged to see ourselves as stupid people. And if you talk to me and know me longer, you'll find that I have absolutely no pride in this or that. I just say, I'm stupid, I don't know. But in fact, I'm trying to be better. Yeah. And finally, my error rate is about 1/3. About 1/3 of everything I do is a mistake. But because I move so quickly, I accumulate a lot of situations. The 2/3 that I get it neutral to right eventually will overwhelm the 1/3 I get it wrong. So that's what it's all about. It's not a perfect score at all. In fact, at most, it's a 51% correct score. But that's sufficient over time. So I'm very proud to tell you that a guy like me, born in Malaysia, etc., went to Hong Kong, I have been voted the world's #1 China manager by CityWire, which is a top agency in Europe. This actually puts me ahead of everyone else for this chosen area, China investing. And here's some proof that it's not based on our figures, but from the HSBC trustees. This is just our flagship fund, Value Partners A fund. it actually has a gain, to be precise, of about 2,650% since inception in 1993. Hang Seng Index, over the same period, had a gain of 461%. This is net to investor. And this is not some sort of small incubator fund. This flagship fund has a size of US 1.45 billion. It's our second largest fund. And we had another fund even bigger, several billion US dollars. The performance is actually better than this, but the history is shorter. Now, okay, I actually prepared two different presentations. This finished the main one. I'll go on to the second one quickly, because I still have time, and then we can do Q&A. The second one is a totally different subject, related subject, but different. Yeah. So I just want to share with you 5 important lessons I had learned from my life as an investor. But remember, this is only about one part of my job, investing money. It's not about entrepreneurship, not about running a business, that kind of thing. So the first thing I learned is that investing is in fact based on common sense. There's we call that 3R approach. Your job is to buy the right business, run by the right people at the right price. That really is the entire formula. Just when you look at a stock and you want to buy, remember it's actually not a stock, it's a business. And is it run by the right people? Are you buying at the right price? And to start with, is it the right business? Now, unfortunately, this simple formula doesn't always work because the businesses are listed in something called the stock market. The stock market has millions of players, many of whom are very emotional, so they can do very illogical things from time to time. So sometimes these investors don't care about the 3 R's. They just buy and sell based on their feeling or what they think is privileged information or some funny lines drawn on the chart. So you may have to wait for the value to come back out again. But my own experience after working in this since the late 1980s is that the other styles you hear about, like momentum, growth, top-down, macro, feng shui, chart reading, sometimes this works, but over time, they don't work. Yeah. Now, here's a little bit of proof, because I know everything we need is proof. So this is just straight from Bloomberg. Value investing, my style, does work. Way outperform the growth style and the benchmark average index, or MSCI China. But the thing about this chart is that it's a 20-year-old chart. There have been periods of up to 5 years when the value style actually underperform growth. So funds like mine really need very patient customers who would know me, trust me. I have won their trust, won their confidence, and stay with me. Another source of funds, of course, is what we call what I think in Malaysia is called EPF money, the long-term pension fund money that stay with you. But there have been short-term periods when value just seemed to simply not work at all. Then we just have to write it out. But over time, all over the world, even in this volatile, emotional market called the China market, value way outperforms all other styles. Point number 2 is to be a long-term investor. The thing is, you always meet friends and maybe some fund managers do, who are very short-term traders, who will tell you their success stories, hero stories, I call it. Of course, they won't tell you their mistakes or failures, who seem to be making a lot of money, right? But in fact, the truth is, short-term trading only works for short periods of time. Inevitably, there will be some mistakes made. It's very similar to going to a casino, for example, in Genting, or in Singapore or Macau, where you meet baccarat players who enjoy winning streaks. They can last even for weeks. But over time, the casino always wins. Never forget that. The casino always wins. It's the same. For short-term trading, you may have a lucky streak, but it is impossible for you to be able to consistently get the 3 R's right. So you're just using luck, not skill, if you do short-term trading. So I personally never speculate. If people try to tell me inside information, I'll tell them I don't want to know. I found from experience that it just is too speculative. And I need to make money consistently over time because it's my career. It's not a hobby or a pastime. Professionals like me, can't really afford to get it wrong for too long and still keep my job. The third point is very fast, dividends. Yeah. For our market, Hong Kong, China, dividends are tax-free and can be up to 1/3 or more of your total return. So we always love high dividend stocks. I'm told that in Malaysia now, dividend is taxed at the corporate level. So the dividend that is sent to you and you put in your pocket is already tax-free. It's not really tax-free, but it's already been taxed at a higher level. So that is important. It's a net dividend. We actually started a fund called High Dividend Fund in the year 2000, which has become one of the largest such funds in the whole world, even larger than our flagship classic fund that I showed you earlier. Contrarian, I mentioned earlier, so I won't go, but I will just say that I will emphasize to you again and again that it's difficult to make money just by following what everybody else is doing. You need to come up with a differentiated approach. In fact, in Value Partners, I always tell my people, if you are in a transaction, you are either a buyer or a seller. There are always two parties, a buyer and a seller. When you buy, ask yourself why your counterparty is selling to you. And if you sell, ask yourself why the counterparty, the buyer, is buying from you. Does your counterparty know more than you do? Always ask yourself question number one. If, in fact, the other guy on the other side of the trade knows more than you, then obviously your information is inferior. You are being taken advantage of. This simple trick has saved us quite a lot of money over the years. To be a contrarian requires great courage. It's easy to stand in front of an audience and say it, but doing it is very tough. Because at the time you're doing it, people may think you're a very stupid guy, or you are just crazy, or going against majority opinion. I was the guy who started the world's fund that specialized in China's B-share market, roughly in the year 2000. This is a very exoteric, marginal market called China B-shares that respectable investors always ignored in those days. Tiny companies. And you go to, for example, a party or a dinner, you shouldn't admit you're buying B shares because people think you're crazy. But I started a fund that does that, and it became the world's best performing fund in 2001. And actually, it made me very famous in Hong Kong because of that, because people saw it. Well, this is a bit of a repeat, but no harm emphasizing it. The strength of character is the real secret. Again, it's all about character. You know, in the world of investment, as some of you who are very interested may know, the masters come from an incredible number of fields, ranging from people who study chemistry, to PhD in physics, to artists and historians, or even the people like me who just finished high school. Somehow we all found different ways to be good investors, proven investors in our own way. You could have a salesman, an umbrella. I would not say you will make a good investor. I never know. It's all about the character of the person, not his educational background or even his family background. A lot of it has to do with not only hunger for knowledge, but very strong fighting spirit. Because very often in investing, you will make mistakes. And you can either treat it as an ego thing, or you can treat it as a learning curve thing. Your attitude is important. And you must have the killer instinct. The thing about the young people we have in our team is that they are like in a Kung Fu movie guy, they wave a knife, but they never push it in. So for us, we teach them, you must kill. You have a good chance, kill, push it in, twist it, you know? So the killer instinct is where you get the big bet that makes 10 times your money. The waving knife thing makes you almost nothing, but just makes you feel good. So strength of character. Be ready to kill. You have to kill. Okay, this is my last exhibit before I humbly invite your questions and answers. Here is a breakdown of skills required, again, for my job, to be a commercial fund manager. Again, to remind you, commercial fund management is different from investing your personal money. It's about managing the money of people. In my case, more than 1 million people give me their savings to look after. So the skill set involved can be broken down into quite a number of different skills. You have to originate the original idea. Okay? Not any idea, but something you had to figure out yourself. You had to do the research. For value partners, we have a small army of almost 70 people doing 2,500 company visits a year across Asia just to get the information at the ground level. You had to make a decision. Remember I mentioned killer instinct and all that? Decision making is actually an art in itself. You'll be amazed at how difficult it is to make the right decision, except with hindsight. You had to structure the transaction in this complex financial world now. There are many different ways to achieve your objective. You had to execute at the best price. In our case now, we have a team of 7 people whose only job is to execute what we want to buy and sell. We don't execute ourselves anymore. You had to maintain the investment. It's a lot of work required. It's like maintaining a car over many years. You finally have to think of a way to cash in and exit. Another separate art and skill required. Usually we exit when we have no further advantage. What we know is also what everybody knows. Then it's time to find something else to do. You have some kind of a macro strategy. That means you have to manage it as a portfolio of different stocks with some view of the global investment environment. And you can't be a fund manager, you have no funds to manage. So you have to know how to do fundraising. Get people to say, I trust you, and I will sign on the subscription form. These are only some of the main skills required to set up, run, and sustain your own asset management company. Thank you very much.
Test. Thank you very much, Dato Sri Cheah. Your vision and drive to push boundaries have resulted in such a remarkable success story. If you kindly take your seat, may I now please invite Mr. Shanmugam to join Dato Sri up on stage for the Q&A session.
今日輪到我啦啩？
唔得，今日第結局啊，我要睇㗎。
咁我新聞呢？
點解佢哋唔可以齊齊睇嘅呢？有點心就冇點解啦，因為5個人可以同一個時間睇5個唔同嘅節目啊！
仲係高清同埋可以揀字幕添。
狂風暴雨我都唔使驚，備有兒童模式更加放心啦。
最重要嘅係，一日只需5角錢嘅咋。
立即簽夠30日免費試用，下載先，冇網絡都有得睇啊！
Okay, it's question time now. I think this is what everybody's looking forward to. Just some ground rules. State your name and where you're from, and please go direct to the question. You know, I'm sure there are a lot of us want to ask a lot of questions. No statements, and please, no pictures. Don't make any pictures, okay? Right. Okay, I'll start the ball rolling. In the last few months, we have seen China, the capital flows from China being restricted. And a lot of deal flows in Europe and has been cancelled. Being a long-term investor of China, and you know the situation there, you know, what are your views on this?
Thank you, Shanmugam. Yeah. So the question is about Chinese inflow, outflow of capital. It is indeed correct that Chinese capital flows have been, they have tightened up on money coming out of China because of the decline in the value of the Chinese currency, the renminbi. This situation continues, but it's nothing to get worried about. We have seen it come and go many times in the last 20, 30 years. Because China is a command economy. It's a controlled economy. It's not a free market economy. So the government does what they think is in the national interest. But in fact, the situation is not as serious as before. For example, in the month of February, 1 month ago, China's foreign exchange reserves actually increased for the first time in more than a year. And also, the key to the puzzle here is not so much what the Chinese renminbi or Malaysian ringgit or etc. is going to do. The key to the puzzle is the other side, what the US dollar is going to do. And I think we are now seeing, since the beginning of 2017, the beginning of a new trend that sees a weakening of the US dollar. This is a real good news for America, for Malaysia, and for China. As the US dollar weakens, there will be less need for us to do this kind of preventive measures to keep currencies, our currency less weak.
Thank you. We can take questions on the floor. My colleagues around will pass you the mic. Yeah. Yes.
Good morning, Dato Sri and Shamagan. My name is Amos Ng. I'm from Seberang Perai. Today, actually, I'm represent our club members. I'm the president of Seberang Perai Professional Entrepreneur Clubs. Currently, we have more than 25 members. They are from born Seberang Perai. They are architects, engineers, lawyers, all the professions. Our question for for Dato Sri is, okay, look at the current situation, and especially the young professionals. They are the hope of the families. What are the investment elements that they should focus? Seems like they graduated in age of 25 and they plan to retire at age of 55. What should they focus? Is so that they can retire. Because the image of the professionals when they graduated, they are the economy support, the trees of the families. What they should invest, especially we stay in the northern regions. And number two, the second one is, we would like to invite Dato Sri, whether you can be our club patrons and advisors.
Okay.
Thank you.
Okay, we'll stick to the question.
Thanks for coming all the way here to attend this Saturday morning event. I really wish I know the answer, but I'm not sure. What I can tell you is that unlike my generation, the challenges for the younger people now are much different. Because if you read some of the research, the rise of artificial intelligence and robotics will take away many of the jobs that we have been taking for granted. For example, in some media now in North America, reporters have been replaced by machines, robots, who write many of the articles that you read in a newspaper. So obviously, technology type jobs are going to be an important thing. You notice I am not recommending jobs in finance, because I think my own industry actually is oversupplied. There's overcapacity in financial services. So I think one generation ago, everybody wanted to be an investment banker or a fund manager. But I think now the game has changed. We have too many investment bankers and fund managers. Yeah. So for me, I would think technology. I would think because of the demographics and aging population all over the world, healthcare is going to be a big thing. Entertainment is going to be a big thing. In China itself, the economy is now increasingly gravitating to what they call the new economy, which is based on healthcare, education, and technology, away from the hard economy. So I think this trend will apply also to Malaysia. And I myself am quite interested to see if there are opportunities to invest in the new economy, especially education, healthcare. With some school friends, in fact, I myself also invested in, I'm a small shareholder in a hospital we built recently in Tawau, in Sabah, the new economy. Yeah.
Yes, at the end there. Yeah, give me a minute. Yeah, that's right.
My name is Ao. I'm a Penang Lang. And I'm an O3. And I'm very happy that the Penang Lang and O3 has done so well. My question is, lately we hear a lot of sabers rattling between China and US. And you say that investment is more than just PE. You could look at the politics, the military, and so on. How do you foresee this panning out? Appreciate it. Thank you very much.
Trade wars. No. Yeah, your question, sir, is about how you see the trade wars. Is it possibility of a trade war between China and US? The military, okay. The political tensions, yes.
Yeah. I could be wrong. I'm not very worried. I think America and China are co-dependent on each other. They may not like each other, but they need each other. America's number one characteristic, and this comes from, for people like me, meeting, reading, and talking with some of the world's most reputable experts on US-China relations. So some of my opinions are not really my own opinions, but what I learned from talking to others. Now, America and China need one another. America has a very serious problem that they don't save enough money. They are notorious for having a very low savings rate. They need to import capital to finance their deficits, to finance their spending habits. The biggest suppliers of savings in the world today are the East Asian countries, especially Japan, China, Taiwan, and Hong Kong. So this relationship, if broken down, will create very serious drop in the standard of living in the United States. I think no politician, not even Donald Trump, would be crazy enough to take that kind of risk. For China, I don't think they are seeking real trouble with anyone at this stage anyway. They need continuing stability to carry out their dream of doubling per capita income from 2010 to 2020. They want their per capita income to double. And they are making incredible progress. I think they will actually reach the target of having probably about US 11,000 per capita income by the year 2020 or 2021. So I think there'll be a lot of talk, jaw they call it, but not war. I don't think they're going to fight.
Okay. Yeah. Okay. Yeah. Rajan.
I'm Rajan Moses, an old friend of Cheng Hye. We worked together in 1970s in the Star. Happy to see you've made it really very well, Cheah. And my question is, you come from China, Hong Kong, and would have an insight into the way they do things there. Recently, there's been a lot of Chinese investment in Malaysia, big corporations, billions of ringgit pouring in. From your point of view, there's a lot of skepticism here about Chinese investment. In fact, it's become like a little bit of a political football. From your point of view, do you think it is justified that there is such skepticism? Do Chinese go abroad and invest the way they do, like they have been recently doing in Malaysia? And what is your view about the Malaysian market and Malaysian investment climate, political climate even? Comments would be appreciated. Thank you.
Thank you, Raja. I think it's a good question and very topical. First of all, it's important to remember that China is the world's biggest country. 1 out of 5 every human beings on this earth live in China. 1.4 billion people live there. So you're not talking about a single entity. What I know about people buying houses in Forest City or putting money to work is that a lot of it has individual decisions made by people who are maybe fed up with the pollution in Beijing or Shanghai, and they have accumulated some savings. Property prices in China have gone completely crazy. In cities like Shenzhen, Beijing, Shanghai, many people can't afford to buy their own homes anymore. The houses there are significantly more expensive than the property prices here in Malaysia. So they come for their own individual reasons. It's not, I think, necessarily very good to see them as China or Chinese as one entity. They're all normal people making decisions for their own interests. And more recently, there have been some very tragic stories where they paid the initial deposit to buy an apartment here in Johor or Malaysia. And then because of the government capital control that Shanmugam mentioned, they cannot pay the balance. So they are in a limbo. They cannot pay the balance even though they can afford to do it. So I hope the property developer will be lenient with such people. Now, overall, the Chinese intentions towards Malaysia, etc., time will tell. But I'm not seeing anything particularly like they are trying to either help or hurt Malaysia. They have their own problems. One of the biggest problems China faces is called overcapacity. They have too many factories making too many things and operating below capacity utilization. So they need a place to export the stuff. So they have the One Belt, One Road is that countries that still need to import things, including Malaysia, they hope to sell. So they hope to build our infrastructure. You want to build a mass transit or a long express train network, they can do it for you at a very competitive rate. But they want to do it because they have built up the capacity. They need to export it. Regarding Malaysian market, for the non-resident investors like me, the single most important variable, if you ask me for just one sentence, is the ringgit. Because of this terrible performance of the Malaysian currency, we have become so scared of Malaysia. You may not realize it. If you are a US dollar guy trying to invest in Malaysia, you will have lost 25% in the last 3 years. And most of that loss is from drop in the ringgit against US dollar. Not because the performance of the market is particularly terrible. The market dropped 5%, but the ringgit dropped 21% in the last 3 years. And I say this because I'm now sounding more hopeful. I believe, rightly or wrongly, that the Malaysian currency has bottomed out. It's bottomed out partly because it's now clear that the price of oil has bottomed out. The price of palm oil is stabilized or even improved. And what we call the political situation in Malaysia definitely has stabilized in the eyes of foreign investors. This is good enough for the ringgit to go back to a more fundamentally correct level. What is a fundamentally correct level? Again, not my personal opinion, I just read the analysis. The correct level should be something like 3.8 to 4.1 to the US dollar. Now, we need a third factor. I mentioned two factors so far, right? Commodity prices, including oil, stabilizing or improving. The political situation and perception improving or stabilizing. The third factor we need is outside our control. We need people's confidence in the US dollar to weaken a little bit. And this is possible because I think the new US administration is beginning to fumble a little bit, flounder a little bit. So if all these comments are right, this forecast of the ringgit, Malaysian ringgit, stabilizing or improving will actually happen. And then people like me will come back to Malaysia and invest. Because if we think the currency is not going to hurt us, we're going to be here. It's as simple as that.
Thank you. Questions? Yeah. I'll come back to you after that.
Good morning, Dato Sri. My name is Cheah Cheng Hye, a professional investor. This is a personal question to you. What is your most profitable investment and your worst investment in your life in terms of value? And in the first place, why you buy and why you sell? Appreciate that. Thank you very much.
Yeah, thank you for an interesting question again. This audience coming at good high quality questions, so I'm very happy about that. Now, let's talk about worst investment first. Let's get it out of the way. My worst investment was in Oasis Hong Kong Airlines. Started by this preacher guy who teaches at Sunday school. The Reverend, what's his name? I forgot his name. But anyway, he and his wife are Hong Kong people who claim to be very wealthy people from Massachusetts. They're Chinese people. And they teach in Sunday school in Hong Kong. They came to see me a few years ago. And they are going to start an airline that imitates Air Asia. And since I knew the Air Asia story quite well, I was very interested. So without much further ado, our fund put in approximately 30 million US into the airline. And the airline went bust in 6 months. Yeah. They had all sorts of problems ranging from Reverend Lee and his wife Priscilla insisting on being control freaks. Even the air stewardess uniform had to be designed by the wife. So it was no longer a no-frills airline. It was actually a very expensive airline, but selling tickets at no-frills prices. But I was stupid enough not to recognize that. And then their first flight from Hong Kong to Moscow was sabotaged by Cathay Pacific. So they were not allowed to land in Moscow. They had to turn back, So brand reputation gone. Yeah. And so on and so forth. And so unfortunately, I myself was at the height of arrogance and pride. Yeah, because I see my company about to get listed. That year, I was actually Hong Kong's highest taxpayer. The first and only time somebody paid more tax than Li Ka-shing's CEO. So it got to my head. I thought I couldn't do anything wrong. No? So I dropped my usual alertness, put in 30 million bucks, and Reverend came to see me 6 months later and said, game over, airline gone. No? Our few planes, we had to sell it. Yeah. I only have one good luck about this story, which is that of the 30 million US we put in, 10 million was guaranteed by a personal friend who was a chairman of another listed company, a very religious guy. He had personally and verbally given me a guarantee that the first 10 million, he will be responsible. And I had nothing to prove it, but he paid it back to me, $10 million, out of his own pocket. It shows you there are good human beings around. Yeah, he himself lost a lot more than me. Yeah. Okay, best investment. There are quite a number of best investments if you really look at it that way. But one that comes to mind is my investment that we bought 15% of BYD in Cheah Cheng Hye, which is listed in Hong Kong. Because BYD became so prominent is because Warren Buffett eventually discovered the stock and he bought the stock. And when he bought, we quickly sold our shares to him. Because from our point of view, he bought at a high price. From his point of view, he bought at a low price. Yeah? Because we were very early. And how it happened was that this BYD guy, Chairman Wang, I went to see him when he was just listed. He was making the batteries. And he decided to diversify into making automobiles. So everybody thought he would fail. How can a battery guy make cars in Cheah Cheng Hye? But I decided one more visit, because I always believe for myself, Penang boy, that I will always walk the extra mile. So people have already given up, but I will walk the extra mile to go and see his factory. And the factory visit didn't start well, but he said, let me show you something that I never show anybody else, because you are so sincere. So he took me to the back part of the factory. I saw approximately 400 molds, M-O-U-L-D-S molds. Molds are metal things that are used to mold all the different components of a car. Even the car handle needs a mold to make. And he said, these molds will make my fortune. In Japan, the molds are made by old craftsmen, so old now, they are no longer going to find them. In China, molds are made by very young people who are quite new and very hungry and work at less than 10% of the Japanese salary. I can make molds for the price that Nissan can never fight with me. I can make many mistakes and I'll still be successful. So he made the molds, he made the cars, it was a big success. And that's part of the Chinese success story, by the way. So BYD, I eventually bought 15% of the whole company and make a small fortune for my fund. And today, of course, BYD is well known for being a pioneer in making electric cars and buses. This is a chapter 2 of Chairman Wang's story, right? Now, I'll just quickly share with you another success story that is a totally different kind of success story that shows you the need to be alert and very fast in what you do. So this is a different Chinese company called Guomei. Guomei, of course, now is not such a big deal. But in those days, in the early 2000s, they were the largest distributor of electrical appliances in China. You know, things like fans and fridge and what have you. That was a big thing at that time, right? So I attended this breakfast in Beijing, Grand Hyatt Hotel. The chair lady of Guomei, the Lisa Du, the girl with the big diamond, she was doing the breakfast for fund managers. And the breakfast was at about 10 a.m., just when the market opened. There maybe all the big guys are there. Fidelity, ABN AMRO, Capital Group, me, eating the congee. So this Lisa opened the breakfast and said, I want to tell you that our company is doing well. I can't give you the exact numbers, but in general, business is great, this, that, We are selling a lot of stuff all over China. And after 10 minutes, I said, sorry, excuse me. I got to go to the washroom. But do you really think I was going to the washroom? No way. I was calling up my dealers in Hong Kong and say, buy the stock, buy 5% of the whole company now, Because I already know that all these big guy fund managers after the breakfast will start buying. So I buy it half an hour earlier, right? And by the time they buy, I'm already sitting there. The price go up, right? So this is another way to do the job. Be fast and alert. Yeah, and have the killer instinct, be decisive.
Thank you. Okay, there's a gentleman there, yeah, at the end there. I think he's from Johor.
My name is Danny Yap. Yes, what's the Johor Lang? Okay, I have 3 questions here. Should I ask it all at one go or one by one?
If it's short, then can all 3. Try to make it short, precise.
Okay, the first question is, in Malaysian context, public listed companies are not really public listed. I quote, I stand corrected. Large chunks goes to private placement, often related to them. Only small amount are available to retail, sold to the unknown public. CEO gets huge remuneration, often into millions of dollars a year. Contracts, product providers, too are related to them. What do you say about this, Datuk Sri?
First question. Oh, I thought all 3 questions already.
No, this is the first question. Second question. One of Warren Buffett's strategy is acquiring companies, retain the CEO, wrote the CEO only 1 letter a year stating the goal the CEO has to achieve. No board meeting. What are some of your strategy? Third question. Dr. Sri, you have been very successful. Your legacy, are you going to leave everything behind to your loved one? Or are you going to do something like Bill Gates and Warren Buffett and give it away?
Thank you. Thank you, then.
Yeah, you know, the thing is this, when I'm listening to your questions, I'm actually reminding myself of one of the own personal beliefs I have in my life, which is that the world is never very fair. In fact, the world is never fair at all. Yeah, I believe that from the time I was born, I grew up in a world that would never be fair. Sometimes it's more than fair to me. Sometimes it's more than unfair to me. I think the first lesson is accept it. Don't fight it. You know, we have something like 4,000 years of civilization on the earth, and except for people like Karl Marx talking about a very ideal state of communism, there will never be a fair world. The thing for normal human beings like us is to learn to accept and adapt to it. So the question about corporate governance and this and that, I live with it for most of my professional life, because don't forget, I started as a specialist in small to mid-cap stocks listed in Hong Kong, China. Exactly what you described just now. Family companies, incredible remuneration for the major shareholders and their children, this and that, you know. So we play with the cards that God dealt to us. We cannot, it's like a poker game where you cannot fight the fact that somehow you didn't get an ace pair, you know, you got a 2 and a 5, so you fight with it, right? So my own formula, since I don't think I can change the world, is to do what I can with what I got. In the case of Value Partners, we have invested in several thousand stocks in my career, many of them over time. We try to talk to the management, and in worst cases, we will move on. We don't make a career out of fighting or confronting people, because we find that for commercial operation, we're not out to prove a point. We're out to make money for clients. And there are enough good companies out there for us to be able eventually to achieve a decent return. So focus not on the bad guys who cause you trouble and heartburn. Focus on the good guys with whom you can travel together to a more prosperous future. Sorry, I think please comment if you have a point.
The second question.
Second question.
Oh, was about strategy.
I think Warren Buffett operates in a different market. I religiously read all his newsletters and et cetera, et cetera. Warren Buffett has a different problem. His fund is so enormous. He is personally the second richest man in the world. That he's not investing in the kind of companies we are investing in. He can only afford to invest in very large, very liquid companies like Apple, which can take up huge amounts of money. So that's a different kind of challenge. It's a challenge of incredible size. And also, I think the US, somehow they have corporatized to a great extent that most companies are no longer family controlled. It's controlled by institutional investors and by funds. Yeah. For my own personal legacy, I think there's too grand a word to put it, because my company by world standards is only a medium-sized company. And I really shouldn't comment too much on my personal things in front of 500 or 400 people. But since you asked, I want to alert you to an incredible and historic opportunity for asset management industry in East and Southeast Asia. In my chairman report, I call it the golden opportunity. Stop for a minute and think what's really happening. The world's biggest pool of savings, personal savings, is on the mainland of China. Mainland of China, the people have a 46% savings rate. Over the decades, they have saved a huge amount of money with almost nowhere to go. They want to diversify. They want to buy things around the world. They want good quality financial products and services. To some extent, they are not getting it. Partly because of capital control that Shanmugam mentioned. That's why you always have these housing bubbles in China, because the money has to go somewhere. But gradually, slowly, China is in the process of deregulation, liberalization, and opening your capital account. This trend is irreversible. We are coming to a point where the Chinese money will not exactly flood the world, but it will come out. It will come out and somebody has to manage the money. The money has to be invested. The money has to be put to work. The money must bring some returns to the owners of the money. This is a huge opportunity for my industry, for fund management. We call it internally golden opportunity. In the next 5 years, we want to seize the opportunity to become Asian version of Fidelity or Templeton. We think we have a historic opportunity to become a world-class asset management company. My job is to try my best to grab the ball and run with it. So watch this space.
Okay, the question from there. Yeah, we have got. Can somebody please pass the mic? Yeah.
Hi, Dato Sri. My name is Tony. Being an investor, I think you know that there's always ups and downs. It's been quite a while we didn't see the very down. So my question is about your vision on how you see the next global financial crisis. Is it going to come from the equity side, come crushing down, or would it be the property bubble burst? Or maybe something else that you know of around the world? Where do you think the potential might come from? Which country? Is it China? China is very emotional. And when do you think that is likely going to happen? I shouldn't be asking for you to look through a crystal ball, but you may have something on your fingertips that you're looking at. Thank you.
The next threat, the next global. Thank you.
Yeah, I think there is a significant chance of another financial crisis happening, perhaps worse than the one in 2008 happening, but I don't know when, maybe next 5 years, next 10 years. That's why in my personal portfolio, although I'm a stock market creature, I always have some gold as well. I always buy some gold and put it in the corner of my portfolio. The next financial crisis, most likely source will be either Europe or North America. It won't be us here in Asia. We are still believers in the market system. We are still moving from a reasonably low base, and our societies are still reasonably coherent. In the West now, the crisis, the origin is going to be political. It's not economic. Politics now drive the economy, and since 2008, the biggest single force affecting financial markets is not the financial market, but the central banks and their program of printing money. Do whatever it takes, to use the exact words, to prevent a collapse. This a lot has to do with the emerging wave of populist politics, where politicians make whatever promises they have to make to ensure re-election. The situation has reached a point where countries are operating on very dangerous deficits in everything. Budget deficits, current account deficits, promises made today intended to be broken tomorrow, and what we call pushing the can down the road. And many of these societies have become so fragmented that political governance is no longer really possible. Some of you may have seen that last night in Washington, Donald Trump's efforts to repeal Obamacare got off to a very bad start. In fact, the Republicans even voted against it, and that's his own party. So it's no longer possible to exercise proper leadership. And many surveys have shown a collapse of confidence in the Western public in political leadership. They don't believe their own leaders anymore. I'm speaking very generally. I think that Western civilization has reached a very difficult phase. Speaking as someone who is Western educated, I believe that this plants the seeds of a dangerous crisis where people's expectations cannot be met. And these people are empowered people. They do have the right to vote people in and out of office. So I think here in Malaysia, or we here in Asia Cap, we may need to find our own way. Yeah, we have lived since World War II on the assumption that the world will be stable under the so-called maybe protection of the United States, but we probably have to review the situation quite carefully.
Yes, the gentleman there, yeah, that's right.
Hi, Cheng Hye. My name is Kong Chi. I'm from Malacca. Well, we do share some mutual friends like Yong Chu Kong, your time in PFS, Teo Aju. And they used to tell me that, that you used to devour all the books in Penang Library. And just a matter of interest, what were you reading then?
Okay, so in simple, I read everything, yeah. But my favorite subject is actually history, yeah. I'm a history fanatic. And at that time, I was also very crazy about the game of chess. So I read a lot of chess books because I memorized all the openings. And then later, when I went to Hong Kong, I became a casino blackjack fanatic. So I learned card counting. So I was able to count the cards as they came out. 1 for picture cards and 0 for number cards. So I have a small advantage playing blackjack. But eventually, they moved to multi-pack. The multi-pack diluted the card count, so my advantage began to... But even to this day, I automatically count cards when they come out of a blackjack shoe. So it's very difficult to explain, but I'm a devoted game fanatic, especially for games like chess, poker, blackjack. But I'm not a gambler. Huh? I'm a systems player.
Okay, I have a question for you, Cheng Hye. You see, we have a lot of Chinese companies coming to this part of the world, like in Malaysia and all. They're in the development space, they're in the construction space and things like that, you know. So, the local companies, some of them do feel threatened by the Chinese companies. Is there a cause for concern?
I don't know, yeah, because I'm not a real policy maker. Yeah, I guess my own feeling about Malaysia is that we should do whatever we can to increase our chances that we won't be caught in the middle income trap. Because having worked in Northeast Asia now for quite a long time, journalist, fund manager, I've seen countries like South Korea, Taiwan, that used to be way behind Malaysia, caught up and even overtake Malaysia based on certain criteria. So we just have to accept that we live in a very competitive world. And I think we have to find the right balance between protecting our own people and industries, but not to the point where we are not competitive anymore. Like I told you about fund managers in Hong Kong, I think they went too far the other way. They have no protection for local players. So people like me are unusual. Most Hong Kong fund managers have no chance to start their own asset management companies. The result is Hong Kong seems to be very successful. We have very high standard of living. But the local people actually are very unhappy because they have no stake, no participation. So that is too much the other extreme. And now we have what amounts to a form of social instability in Hong Kong society due to lack of participation. So my best guess is let the professional politicians, like maybe Donald Lim here, find the right balance.
Okay, question at the end. Yeah, right at the end.
My name is Goh Ming Han. Just got a quick question about how does Value Partners, or how do you implement succession planning in Value Partners? And do you actually try to get your kids involved also in your Value Partners? Can you share a bit about this? Thanks.
Yeah, my children are too young. I don't know whether they will get involved or not. At the moment, my eldest son's ambition in life is to be a writer in the English language. In fact, he is attending writing classes. So maybe there's something about writing in his blood, So, but anyway, more seriously on the succession planning, yeah, we are a listed company. We have strong obligations. We have a crew of, we now train four and a half generations of fund managers in-house. So there's one layer after another. And we recently hired Dr. King Ao, who used to be CEO of Bank of China and then HSBC Asset Management, to join us as our CEO. The doctor, by the way, is a PhD in physics, so it's not in finance, but it's okay. Anyway, so there are succession plans. I will be, I hope, doing less and less work. At the moment, I work 7 days a week. I want to gradually reduce that to 4 days a week over time. Yeah.
Okay. The lady at the end, yes.
Hi,
We're down to the second last question. Okay.
Hi, I'm Ang here. Actually, when I told my friends that I'm coming for this talk, the question they asked me is, can you ask him what share to buy? And I'm surprised that none of the, I was waiting and waiting for somebody to ask their questions. But I am surprised that nobody want to make money. There are three questions which I wanted to ask. One of them is, you talk about a meltdown of the stock markets, which you think there's a potential in North America and in Europe. May I ask how many % of your funds are in cash now, waiting for the crash to come to go in, so that hopefully we can follow and ride with you? The second question is, you foresee that our ringgit is going to strengthen from 380 to 410 from your talk just now. And you were very negative on Malaysia because of our devaluation of our ringgit, which is now at about 450 against the US. Does it mean that you have not been buying, and does it mean that you will be buying? And if you do, can you let us know what are the potential counters that you're looking at, so that we can also make a phone call and go to the toilet and make a phone call? The third question I want to ask...
Can you please stand up? He can't see you.
Yeah, madam, would you mind please standing up? I believe you're one of our regulars.
Yeah, okay.
Oh, no, you're not. Okay.
No, it's the first time because each time I wanted to register, it was full. So this time I registered the first day. The third question I want to ask you is, you have so many funds in Value Partners. What is your recommended top 3? And how about are we going to buy your funds? Do we need to have $1 million US, or do we need to have 100,000 US dollars, or can we just buy with 50,000 ringgit?
Okay, thank you. 3 questions. Okay.
Okay, yeah. Anyways, that was not really one question. It's more like a machine gun of questions, yeah? I'll try to answer as much as I can. First of all, I want to tell you about my theory about how to handle what I the risk of a financial crisis. I don't try to go cash. I have a bit of goal, I must admit, but that's about it. There are two reasons. The first is that I think I may be wrong. Maybe there won't be a financial crisis. Maybe the central bankers and politicians will find a way to postpone it to the end of the century for all we know. So I can't go around doing my job every day, living in fear of the next financial crisis. The second is my big money theory. I believe the best way to handle a financial crisis, if your real objective is to make 100 million, then now go all the way and make 200 million. Then later you lose 50%, you still have 100 million. Yeah. That has been my very basic strategy since the 1990s. And don't forget, since my company started, we faced the 1998 Asian financial crisis, we faced the 2008 global crisis, and we faced several other minor crises in between. In Hong Kong, we even have a SARS crisis when the market just dropped very heavily. In the end, from the time we started to now, people like me, we had a gain of 2,650% after tax. So the financial crisis hurt us, but it never killed us. By the time it happened, we already made so much money, we could easily afford to lose 30, 50% and still be way ahead. So I believe the way to handle financial crises is to make as much as you can now during the summertime, so that when the winter comes, you can still handle the winter. That's a much better way. Regarding Malaysia, as I emphasized, I think actually the year is starting well, and I think the ringgit, as it stabilizes or even recovers, will bring a period of, strength back to Malaysian stocks. In fact, we have been buying only Malaysian palm oil plantations in recent years because palm oil is an international commodity sold overseas in US dollars. It's about 3,000 ringgit a ton right now. But now we are gradually looking at other sectors of the Malaysian economy as well. Yeah. Regarding my funds, there are many ways to buy. We have a local distributor as well. Kenny, what's the local distributor?
Afin Huang.
Arifin and Huang is our local distributor.
Afin Huang.
Yeah, okay. And you can buy through that. You can buy our ETF, exchange traded funds, like China Value Fund is an ETF traded on the stock exchange in Hong Kong. We even have a gold ETF traded on Hong Kong Stock Exchange. So there are different ways to buy the fund.
That's about it, right? Yeah.
Are these the questions? Or?
Yeah.
That's a question from Mr. Lionel Chung there.
Yes. The last question, yes.
Thank you, Cheng Hye, for that good Q&A. One quick question. I noted you spoke to the US investment community on Warren Buffett's investing. So can you tell me, with now the current savings all in China, what can you teach the US about trying to tap that, and how do you defend their entry to your lunch or your dinner or the pool of savings in China? And what can you teach them, and how will you defend being a small player with a giant that they're all looking at the same pool of funds in China? Thank you.
Yeah, thank you, Lionel, for that question. That's very, I would say, industry type question. The challenge facing companies like Value Partners is how to manage a ever-growing pool of money, size, bigger and bigger and bigger. We think we can double our size in the next few years, probably more than double our fund size. But be able to do it without degrading performance. The trouble with size is that it's harder and harder to perform the more and more funds you have to manage, because you only have so many good ideas. You have to spread them out. So that's a professional challenge. And the third challenge is that you have to be able to manage bigger size, cannot sacrifice your performance, and yet accept lower fees. The Chinese market, there's a lot of fee pressure. They don't really want to pay good fees. This is very normal, I think. But they still want the best performance. So people like me have been experimenting with many concepts, including smart beta, the increased use of robotic techniques, and the increasing use of what we call mass manufacturing techniques to try to overcome these three challenges. So that's the same message I give to the Americans. The challenge of asset management is how to transform the skills originally of one sifu. I'm the sifu, the master. I can make the suit into a mass manufacturing factory where we need a minimum of 100 sifus as good as me. You think about if this is your job, how would you do it? It's like tailoring. In the old days, you go to a tailor, make one suit. He takes a guy maybe 5 days with 2 fittings. Now, I need 100 such tailors who can turn out the suits almost on an assembly line. Managing a pool of money that may be roughly equivalent to 1/4 the size of Malaysia's gross domestic product out of a single floor in central Hong Kong. How are we going to do it? Yeah, that is the challenge.
Okay, that concludes the Q&A session. Thank you very, very much, Datuk Sri, for an insightful and inspirational sharing session. I would now like to invite Datuk Fu, together with Datuk Sri Wong Chun Wai, to present a token of appreciation to our guest speaker today, Datuk Sri Cheah Cheng Hye. Ladies and gentlemen, please, a big, big, big round of applause for our guest speaker today, Datuk Sri Cheah Cheng Hye, Chairman and Co-Chief Investment Officer of Value Partners Group. With that, ladies and gentlemen, we have come to the end of our Power Talks. Thank you for being here today. Thank you, Datuk Sri, for sharing your astounding success stories with us.